Welcome back. Not much to update on the stock markets at this point, except that I just noticed it went below 5,800. But this is a small, maybe choppiness. We thought the market was building some strength, but that's given way. Not by much. So we could concentrate on other issues, especially personal finance issues, which are of abiding interest. Sumeet Vaid, the founder of Freedom Financial Planners, joins us. Sumeet, this is a very simple question. We all have a way of calculating our net worth, but we wouldn't know if that is right. How does a person calculate one's net worth?
Simple question, Lata, but very important, because in Indian context, if I can use the Hindi word, net worth is equal to your wajood, your self-respect, and we Indians are really, proud for that. So it's a very important term. A simplistic understanding of net worth is it's assets minus liabilities. So for a typical family, assets will include investments, which might be in fixed deposits of banks, which might be in mutual funds, which might be in shares. We, in fact, as a financial planners, encourage even jewelry to be included as part of investments, because it is for the rainy day. So all kind of investments, your receivables in form of income, which you are getting, any other kind of assets, movable, immovable, which is your property, your secondary property, which is a second home, even your primary property. Many a time people don't want to include it, though it's a consumption asset, but from a net worth point, it's very important. So all your assets should be on one side, and then your all liabilities. Liabilities will include, all the loans or money which you need to repay back to within your family members, or any such informal arrangements which you have got into. And when you minus, liabilities from assets, the leftover is your net worth. In other words, that's your real wajood, and it's becoming increasingly important in a society like India, where loans are becoming the way forward. And the worry which I have is people are not understanding. Over a period of time, net worth erosion we are seeing is happening at a rapid pace in a Indian middle class society.
Okay. Sumeet, what about, in a couple? I mean, if your husband owns a property, do you count that in your net worth as well?
Okay, now it's not a very simple question, because in the modern marriage or modern families where husband and wife both work together, one needs to really understand how the financial system work, and we always encourage to have a very transparent system in terms of understanding whether liabilities which is being taken by one member is also being taken by the other part of the family member. So ideally speaking, if arrangement is that you want to have co-joint accounts and co-joint assets, then it is part of family net worth. But at the same point of time, if you want to keep it separate, in an era where marriages are becoming shorter, that might be a better idea.
Yes, it is a deep question. Let's take a break. On that note, we have a lot of viewers lined up with questions. We're back in a minute.
Hi, welcome back to the show. We're still with Sumeet Vaid, our personal finance expert. We have a caller also who joins in with his query. Chandrasekhar calls in from Pune. Hi Chandrasekhar, what's your question?
Hi ma'am. My question is, I wanted to invest some amount for 1 year.
Okay.
Say like 20,000 per month.
Okay.
For 1 year. So where I can invest, and my target is 1 crore in 10 to 15 years.
Do you have any long-term goal or any requirement of this money eventually?
Yeah, for to buy a flat in Pune.
Okay.
I'm a little confused. You said for 1 year first. Do you want to keep your money for 15 years in the investment that you make, or do you want to keep it for a short term?
This 20,000 for only 1 year, ma'am, because I had given money of 3 lakhs to one person. He is returning me every month.
Okay, so you want to find an investment for that, and separately you want to know how much you need, how much you have to invest to buy a house 15 years down the line?
Yes.
What might be the amount that you are looking at to build that house? You want 1 crore, you want 2 crore. At the end of 15 years, what are you looking at in terms of an amount?
Ma'am, 1 crore.
Okay. Sumeet, if you have more questions, please go ahead.
No, that's good. Mr. Chandrasekhar, it's a very good thing which you are doing in terms of articulating your goal so clearly. So the goal in front of us is buying a house. Time is 15 years. and then we need to have 1 crore rupees. Now, if we work backwards, asset allocation is very important. That means, we'll suggest that you invest in equity, fixed income and gold. And we are assuming equity returns to be at nominal GDP, which is 14%, and fixed income at 7%, and gold long-term return at 10%, seeing the past average of 10-15 years. Now, keeping that in mind, our suggestion will be you should save 24,500 rupees, on a monthly basis, systematic investment plan in the asset allocation of 70% in equity, 20% in fixed income, 10% in gold. Now, I know it might sound profound right now of saying that you don't have that kind of a surplus, or I might not have, but the beauty about setting up a goal is that you know what you need to do in terms of trying to achieve. So once you've set the goal, the funds which you can really go and use it to achieve this kind of asset allocation could be, long-term equity fund from HDFC, which you are already doing, HDFC top 200. Reliance Equity Fund, you also mentioned about that in your question, is good. IDFC Premier Equity, that's a good fund. Birla Fund, Sun Life, Frontline Equity, that's a good fund. And in the fixed income side, there are a lot of dynamic bond funds which are available in the market, easier to use, like Birla, like few of the more like IDFC, ICICI Pru, dynamic bond funds. And on the gold, it can be ETF. So this is what the asset allocation for this particular goal will be. You've also mentioned you've got 20,000 to be invested for 1 year. Again, there my suggestion will be continue the same asset allocation, because you haven't told us when you need the money for. So you can continue the same asset allocation, which is 20,000 in the same 70% equity, 20% fixed income and 10% gold. Goals are always important to really go and achieve your dreams. So go for it.
Okay, that's fairly well explained. Sumeet, for gold, if he has to invest, is this a good time or this a good year to invest? Or should he, because he has such a long-term time horizon, do you think he should postpone it for a bit?
No, he should not. See, as individuals, for us to get the timing right is almost impossible. And gold in India has an emotional connect. It's when we say consumption, we don't like to wear jewelry from a view of gold. We also like to have a backward emergency planning with gold. So we always like to suggest gold over a longer period of time. And if you have 10-15 years, every time is good time to really go and create an asset class like gold. But the assumption of return which we have taken for gold is not very aggressive. We take it very conservative, between 7 to 10% over a period of 10-15 years.
That also assumes that our inflation will be at 7 to 10%, not a good idea. Anyways, Sumeet, thanks a lot for that very detailed and precise explanation. Sure, even those who haven't asked that question are going to benefit. We'll wrap up this edition of Markets and Macros on that note. Business Lunch in a minute.